Ladies and gentlemen, good day and welcome to Manba Finance Limited Q3 FY26 earnings conference call hosted by Arihant Capital Markets Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Haley Shah from Arihant Capital Markets Private Limited. Thank you, and over to you, ma'am.
Hello and good afternoon to everyone. On behalf of Arihant Capital Markets Limited, I thank you all for joining into Q3 and 9 months FY26 earnings conference call of Manba Finance Limited. Today, from the management, we have Mr. Manish Shah, Managing Director, and Mr. Jay Mota, Executive Director and Chief Financial Officer. So without any further delay, I will hand over the call to Mr. Manish Shah for his opening remarks. Over to you, sir.
Yeah, thank you, Ellie. Good evening, everyone, and thank you for joining our earnings call today to discuss the performance for the third quarter and 9 months of the financial year 2026. I would also like to thank Arihant Capital for hosting this earnings call. Let me first start by giving a brief overview of the company and operational highlights, followed by with our CFO will brief you on the financial performance for the third quarter and 9 months ended financial year 26. Manba Finance Limited is an NBFC offering a range of financial solutions, including loans to new two-wheeler, three-wheeler, used car, small business loan, top-up loan, and used two-wheeler loans. We are currently operating in 113 locations across 6 states, precisely Maharashtra, Gujarat, Rajasthan, MP, Chhattisgarh, and UP. Our distribution network includes over 1,400 plus dealers. We have a secured funding from 3 public sector, 10 private sector banks, and 23 NBFCs. We have a total team size of approximately 1,700 employees, out of which more than 700 plus employees are a part of sales team. Our internal collection team ensures low NPAs in the industry. The company commands one of the fastest turnaround time for loan sanction in the industry, with over 60% of our loans sanctioned in 1 minute and 92% loan sanctioned within a day. Lastly, during the quarter, we also entered into a strategic MOU with TVS Motor Company, enabling deeper collaboration across their dealer ecosystem and enhancing our reach in the three-wheeler financing segment. In conclusion, the quarter under review reflects the strength, resilience of our business model with healthy growth in AUM and disbursement, stable asset quality, strong liquidity, and a well-capitalized balance sheet, supported by robust demand trends, disciplined risk management, and strategic partnership. We remain confident in our ability to deliver sustainable and profitable growth and long-term value to our stakeholders. Now I request our CFO, Mr. Jay Mota, to brief you on the financial performance. Over to Jay.
Thank you, Manish sir. Let me provide a brief overview of the financial performance of the third quarter and the 9 months of the financial year 2026. As of December 31st, 2025, our asset under management stood at rupees 1,631 crore, reflecting a robust year-on-year growth of 25%. Our total balance sheet size stood at 1,771 crore. During the period, we have achieved a record high disbursement of rupees 746 crore compared to rupees 672 crore in the same period last year. The strong performance was primarily driven by encouraging demand in the two-wheeler segment, supported by the continued expansion of our dealer network and addition to the new location during the quarter. For the third quarter under review, our net interest income stood at rupees 42 crore, reflecting a growth of 17% year-on-year. The profit after tax for the quarter was 13 crore, demonstrating a healthy profitability. For the 9 months of the financial year 2026, the company reported net interest income of rupees 110 crore, representing a 19% year-on-year growth, supported by a steady loan growth and improved funding efficiencies. We continue to deliver healthy profitability with net interest margin at 12.65%, supported by gross yield of 22.80%. Profit after tax for the period stood at rupees 34 crore, marking an increase of 15% year-on-year basis, reflecting our focus on the sustainable and profitable expansion. We delivered season's highest disbursement of rupees 347 crore in the quarter, which was 48.90% increase in quarter-on-quarter. We also added 37,500 new customers, taking our total live customer base to over 2 lakh. The momentum was driven by the festive demand, expansion of the branch location, and deeper penetration in the key market. We further expanded our presence across Uttar Pradesh, Madhya Pradesh, strengthening our portfolio in these states. Turning to the portfolio mix, our exposure was primarily to the core Manba business at 92.35%, with co-lending partnership, DA and BC arrangement accounting for 3.89%, 3.01% and 0.75% respectively. Talking about the product mix for the period under review, two-wheeler accounted for 85.91%, small business loan for 4.22%, top-up loan 4%, three-wheeler 3.05% and used vehicle loan 1.38%. This clearly demonstrates that over 95% of our portfolio remains secured. Our asset quality continues to remain well under control. As at the end of the quarter, gross NPA stood at 3.38%, while net NPA were 2.57%. Credit costs remain extremely stable, with the losses consistently below 1%, reaffirming the strength of our collection engine and quality of our underwriting process. On the provisioning front, we continue to maintain prudent stance. Our expected credit loss provision stood at around 21 crore compared to IRAC requirement of 13 crore, resulting in a healthy excess buffer. Further, our capital adequacy ratio remained healthy at 25.06%, well above the regulatory requirement, providing ample headroom to the support future growth. Importantly, as per the structure ALM statement filed with the RBI, the company reported no negative mismatch across any time buckets, highlighting the strength of our liquidity management framework. Our credit profile remains well supported by the external rating, with CARE rating assigning us BBB+ with a positive outlook and acute rating assigning us A-. On the funding side, our average cost of borrowing currently stands at 10.12%, which has gradually declined, benefiting from the improved credit rating and favorable market conditions. On December 2025, Stage 1 asset stood at 1,522 crore, accounting for 93.30% of the total portfolio, reflecting a strong asset quality. Stage 2 asset were at rupees 54 crore, that is 33.32% of the gross asset, and remains broadly stable compared to the previous quarter. Gross Stage 3 asset stood at 55 crore, that is 3.38 crore of the gross asset, improving from 3.52% in the September 2025, while net Stage 3 asset declined to 2.57% from 2.68%. Overall, the company continues to deliver steady financial performance supported by the healthy margin, controlled credit cost and strong capital position. With this, we can now open the floor for the question and answer session.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use the handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Divyam Joshi from 92 Capital. Please go ahead.
Hello, sir. Congratulations on the good set of numbers. I wanted to ask that the borrowing costs have moved up sharply, while yields are stable, right? So how much of this pressure is structured, and what is your realistic NIM outlook for the next 2 or 3 quarters?
I didn't get the answer. You said the borrowing cost has been reducing and the
No. The borrowing costs have moved up from from YOY basis. It has moved up, right? And the yields are stable right now. So how much of the pressure is structural, and what is the realistic NIM?
So borrowing cost is being reduced. It was like earlier, it was, just a second.
11.15.
Yeah, it has been reduced from 10.80 to 10.12.
Okay. And and
It
what's
is
your
2025, and we are reduced to 10.12 as of December 2025. So there will be, so because of the reduction in the borrowing cost, there will be growth in the NIM margin going forward.
Okay.
Yeah.
Okay. And one last question. The current NPA is at 3.4%, right?
3.38, yes.
3.38, right? So as we are expanding into newer states, so are you tightening your underwriting or taking higher risk to drive disbursement?
Yeah. So basically, we have not added any state this year, and neither we are planning to add any new state, but we are just penetrating the state which is just started to in last 3 years, that is UP and MP. And in the new state, we always restrict our LTV to 75%. So where there is a less possibility of increasing the NPA, and that's how we have been grown in the past also. And that is the reason that on a 100 crore AUM also our credit loss was less than 1%, and today at a 1600 crore rupees of AUM also our credit loss is less than 1%.
Okay, that's it. Thank you so much, sir.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and one on your touchtone telephone. The next question comes from the line of Sudarshan Nachimuthu from Prosperity Wealth Management. Please go ahead.
Yeah, am I audible?
Yes, Sudarshan.
Yeah. So, sort of some bookkeeping question. In your presentation, your 9-month borrowing distribution is down from the H1 presentation. So, is it actually come down, or is it a error in PVT?
What you said, borrowing?
So, slide 13, your source of funds, the sum is around 1,350 CR. So what is the total outstanding borrowing as of 9M?
Total outstanding borrowing as on December, you want to understand, right?
Yeah. So as on December, outstanding was around 1,350 crore.
So it has come down from Q2. That's what you're trying to say.
No. So what happened, during the September, we were at healthy liquidity of around 400 crore for our seasonal business in the month of October. So during that period, so going forward from October and November, we have not borrowed any fresh funds. So that's why the borrowing has came down.
Okay, then filings interest cost has gone up around 8 odd crores.
No. Interest cost?
Finance cost.
Finance cost has?
From finance cost, Q2 finance cost was 34 CR, Q3 at 42. If borrowings has come down and cost of borrowing is stable, your finance cost has gone up. So
No. So major borrowing which we have borrowed in the month of September. Okay, we have borrowed around 300 plus crore in the month of
Last
September.
week of September only.
So that's why the borrowing cost in the month of October was slightly higher.
So,
And there is a reduction in around just
get the question
100 crore reduction in the borrowing.
And there is also, if you see the finance charges, then whatever major business which we have done in the month of October and November, which first EMI presented only in the month of December. So the interest income of those cases will start majorly from this quarter. This quarter will get the entire quarter earning for those seasonal business.
I think you missed the question. When quarter on quarter your borrowings has come down, how come the finance cost has gone up? So that is the question.
No, quarter on quarter it has not come down. Only September quarter to December quarter it has come down, because September we have borrowed 410 crore rupees in 1 month, okay, and only those out of that 300 crore plus amount has been borrowed in the last week of September. So that entire finance cost which has been not put in that September quarter, it has come down to December quarter. And because the season has gone, so we have not borrowed any new fund in the month of October and November. So that's why, although the borrowing is reducing, but the finance cost is increasing this quarter.
So borrowing also reduced by just 100 crore. And whatever we have borrowed, means like in Q2 we have borrowed somewhere around 500 crore extra. So that interest income for the 500 crore came up entirely in this quarter 3. That's why the finance cost has been increased.
Understood. So you borrowed the major chunk in the lower end of the quarter, so full effect has come.
Because see, the season was in the month of October because of Dussehra and Diwali, so we have to be ready with the funds. So we were at healthy liquidity of 400 crore by borrowing the funds in the month of September. And there is a reduction of hardly just 100 crore in this 3 months. That's it.
Okay, understood. Got it. Thank you for that. And so is there any particular reason we are concentrating more on NCDs than on term loans? And if you can give us a breakup of what is the term loan borrowing cost and NCD borrowing cost.
So NCD borrowing cost is right. You have rightly stated NCD cost is slightly lower. Right now we are borrowing at 10.65%. So, and term loan, what we are borrowing, it is at 11%. So NCD remains the same. And also we want some of the retail exposure and person, means like retail investors should also invest in this bond, so they can get good income from our side.
And the visibility of the Manba will increase because of the NCD, because if there are only 43 lenders in Manba, they only know how Manba is doing and how they are good in repayment, how they are good in all the performance and governance. So we want to give a more exposure to the company, to the retail investors. So in future, whenever we go for a second round or any capital raise, that time also this platform will definitely help us, because by giving a 10,000 rupees of denomination for NCD, you are reaching out to thousands of people.
Understood. And within the term, how much would be your securitization portion and how much would be actual term loans?
So securitization portfolio is around 150 crore as of December. But we are following the NDS, so it is a part of balance sheet item only.
Yeah, understood. You are not recognizing from the balance sheet. That I got it. And so this latest rate cut, is there any pass-through mechanism from banks? So like you mentioned, term is at 11% cost. So is it repo linked or MCLR linked?
So it's a mixed, some are fixed, some are linked, okay? And as a policy of the company, we keep on doing the PTC transaction around 25 to 30% of our total borrowing. So what happens that, that is a fixed cost. But whatever, we have sold, and then there is no interest impact is going to come on that. So now we are going to start some DA transactions also. So that's why we are, making this way that around 40 to 45% of our total borrowing should be unaffected with the changes in the interest cost.
So NCD which we are borrowing, it is at fixed cost only.
Yeah, NCD got it. I was asking about the term loan.
Yeah, so around 456 crore is at fixed cost. Then PTC is also at fixed cost only. Apart from this, some of the term loan are also at fixed cost.
Okay, understood. So I think I've exhausted my questions. I'll come back in the queue for further questions.
Yeah.
Thank you very much.
Yeah.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and one on a touchtone telephone. The next question comes from the line of Rohita S. from an individual investor. Please go ahead.
Hello, sir.
Yes.
Sir.
Hello. Am I audible?
Yes, please go ahead.
Sir, what is our incremental cost of borrowing in Q3 of FY26?
Incremental cost of borrowing is, as we discussed, that we are borrowing NCD at 10.65 and the term loan is around 11%. Our average cost of borrowing is 10.12.
And is it further expected to decrease?
Yeah, so every quarter on quarter we are reducing. So from last quarter to this quarter it has got reduced, and now we are discussing, we are expecting a big amount of sanction from one of the PSU at a very less rate of interest. So definitely quarter on quarter this is on a decreasing rate scenario.
And sir, any further guidance for FY27?
So this will remain constantly growing company. Every quarter on quarter we are growing. From the day of listed, all the 5 quarters we have shown our robust growth, and this will keep on continue.
Sir, any number in mind?
So we, as in my previous calls also we have discussed, and I have told that we will end this FY26 by 1700 crore to 1750 max.
And sir, for FY27?
I will not be able to give you exact number, but yes, the company has always been focusing on a growth of 25 to 30% year on year.
And sir, we are looking to any more loan products, or are we comfortable with 5 products currently?
So now we are just adding one product. In last call also we have discussed that we are making a funding policy. Now it is completely ready. We are ready with the team also. On 10th of February we are launching a lab. It's a MSME lab. So that maximum loan amount will be 20 lakhs. Minimum will be 5 lakh rupees. So this is the product which we are it is in the pipeline to start from February. Rest we will focus only on our 5 products only.
And sir, are we launching LAP in all the states, or are we going to start from?
No, selectively. The way we have started small business loan, we started with Mumbai first, then Pune, Nasik, Ahmedabad. Now, it's same way we are starting this lab with Mumbai and Pune, starting with. Then we'll see the 6 months how it is working, what kind of gaps are there. We'll find out the entire process. We stabilize our manpower and the team, and then we'll start with Nasik and all.
And sir, are we going to expand into more states, or want to go deeper in existing states?
No, so we'll not expand state, but we'll go deeper in the state, especially in UP and MP.
Okay, sir. Thank you.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and one. The next question comes from the line of Sarthak Shah, an individual investor. Please go ahead.
Yes, good evening, Manish Shah.
Yes.
So I think you had earlier guided of 100 crore rupees profit in next financial year 27. Am I right? Does it still hold true?
No, we have not told 100 crore. It was at 28, 27, 28. So next
Okay.
year we are targeting anything around 65 crore to 70
Okay.
crore.
Okay.
And after that, it will be.
Okay.
Yeah.
Okay. That's nice. So that would be approximately ROA for next year would be around. Can you guide that?
3.25 to 3.5.
Okay. And so that would be ROE of around 15%. Is that right?
Yes. So you have 14 to 15%, right?
Right. Okay. Yeah. That's it from my side. Yeah. Thank you.
Thank you. The next question comes from the line of Sudarshan Nachimuthu from Prosperity Wealth Management. Please go ahead.
Yeah, hi. Thank you for the opportunity again. You mentioned you'll be starting direct assignment transaction shortly. So is there any internal target how much would be the quarterly run rate you'll be targeting, and what would be the spread you will be keeping, and what will be the portion you'll be assigning?
So this is everything is under discussion. Okay. So we will do one transaction in this quarter.
Okay. And would you like to comment on the spread you'll like to keep?
Spread, you are asking about the?
So you'll be assigning at a certain ROA, right? Like we charge 22% for the client, and we'll assign it at a, let's say, 10-11% yield to the assigner.
Yeah, so
how much
see, our pool is good, so we are expecting around to get it at around 10%.
Okay, and you'll de-recognize the asset, right, from the balance sheet?
Yeah.
Okay. And on the secured lab product, you mentioned you'll be starting it. So what kind of yield expectations are you targeting internally for this product?
19 to 20.
Okay. And which state are you trying to start? And
We are starting Mumbai and Pune first.
Okay then. So that's it from my end.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and one. The next question comes from the line of Sampath Raj, an individual investor. Please go ahead.
Hello, sir. Good evening.
Yeah, good evening.
I just wanted to understand how is the mix between new and used vehicle loans evolving, and do you expect any shift in this composition going forward?
No. So we are gradually focusing for used two-wheeler because now it is becoming a little organized market. So used two-wheeler we are focusing, and month on month our disbursement are also increasing. It will help us in our improving our average yield on the AUM also. But the shift will not be very visible. Because it will today it is 97% is new, 98% is new, and 2% is used two-wheeler. But it can go up to 10% because it cannot go beyond that. And in used two-wheeler there is a less competition also. So we are gradually may start focusing on that.
Okay, sir.
Thank you. The next question comes from the line of Sudarshan from Prosperity Wealth Management. Please go ahead.
Yeah. So on the used two-wheeler front, is it like targeting separate dealers over and above the OE dealers you have, or is it the same kind of dealer pool? Basically, you deal with the exchange vehicles.
No. It's a completely separate set of dealers who are completely active in the used two-wheeler business only.
Okay. And how is the existing competition in this used two-wheeler? Is it mostly local players, or do you see any organized guys in it?
No. There is IDFC is also very active in the used two-wheeler. Okay. Over and above IDFC, there are very few players. Now, some people have started. Will CMI also one of the good player. but recently they are not doing at all the locations. So these are the only 2-3 players.
Okay. And given the current GST reduction and used two-wheeler being lower end of the value, so what would be the ticket size and the LTV you will be targeting?
Yeah, so ticket size will be around 55,000, and LTV, we take the OBV as the base, and from the OBV it will be around 75 to 80%.
And how about used four-wheelers, passenger four-wheelers? Are we targeting that too?
Yeah, used four-wheeler we have started, but because of the competition, and we are because of our cost of borrowing is at 11, and the ask at used four-wheeler is around 16 IRR, and we are lending around 17, 18. So the kind of growth which we are expecting, that is not happening. So we are planning to have a co-lending partner for the used car, which we are discussing with the two lenders, and hopefully by this quarter we should get one tie-up with at least with the one tie-up, and after that we will be able to push the used car financing in a big way.
Okay. And on the OPEX part, currently I think we are around 5.6% against AUM. So
Yeah.
given these new products you guys are launching, and since they are being in your home state, are we to assume that your costing OPEX to AUM ratio would be stable going forward, or is there any room for higher escalation in this part?
No, it will remain stable because the AUM spread will increase, no? So that's why.
Okay. And I think we had a conversation earlier, like there will be some sort of equity fundraising on Kutch. So is there any time frame you guys have finalized that you want to raise it? And
So yeah, we are thinking of in the second quarter of the next year, or maybe third quarter. It all depends upon the market scenario. We all know market is not doing well, so it can be shifted here, one quarter here and there. But definitely yes, next year we will raise the capital.
okay. And when in terms of OPEX, your current AUM per employee is around 9.6 mil. So what would be the steady state trajectory when you want to model it?
Please come again.
AUM per employee, as per your
AUM per
around 9.
Yeah. So that
what would be the
obviously that will keep increasing, and then again once when we are starting a new location like UP, next year we are adding almost 18 to 20 new locations, and we are adding almost 100 plus employee over UP. So again it will dip for a momentary, but eventually this will keep on growing.
Okay, understood. And
Sorry to interrupt.
yeah, I'll get back in the queue.
Yes, thank you. A reminder to all participants, anyone who wishes to ask a question may press star and 1. The next question comes from the line of Jinal, an individual investor. Please go ahead.
Hello.
Yeah.
So actually, I just had two questions. First, that with the PCR at 24%, well below the 40-60% industry average. So how do you see that? Do you need to strengthen the provisions in the coming quarters? So what is your take on it?
Yeah. So basically, we have been kept 24 because our credit loss historically is less than 1%. But still, as already Jay mentioned, that as per the RBI guidelines, we are much ahead of what we are supposed to. But as you rightly said, that industry is generally doing for 40%. We are gradually increasing. It was 10, then made it 13, 16, 20, and 24. And this quarter, we are expecting that this quarter the profitability will support much, and we are also going to do one DA transaction also. So then we'll strengthen our balance sheet by making it from 24 to 25 or maybe 26.
Got it. Very helpful, sir. Thank you. Also, secondly, several peers are aggressively expanding into the commercial vehicle financing space. So how do you see this trend, and what is like your stance in this segment?
Yeah. So, commercial vehicle is it's a very different, product. You have a different set of resource partner, different set of collection also. So, because predominantly since many years we are into two-wheeler, and gradually we are shifting to three-wheeler, we are adding three-wheeler used car also. So in recent time, we don't think that we will add this in our product portfolio.
Got it, sir. Thank you so much. That was all from my side.
Thank you. The next question comes from the line of Devan Shah from Eternal Capital. Please go ahead.
Yeah. Hi, sir. Thank you so much for the opportunity. So, in my opinion, your capital adequacy ratio is really healthy. So, what is the plan to deploy capital and maximize the returns without compromising the asset quality for the future?
So, capital adequacy is today, as you rightly said, it is healthy. But as a policy, no, we don't want to leverage more than 4 times. We already reached 3.37. So, 4.25, that is what max we would like to go. Although we can go up to 5.5, 6 times also. But as a policy, just to, in any kind of scenario, companies should be protected with all kind of, natural calamity or anything. So we will try to remain at 4 times. And by the time we'll reach 4.25, we'll definitely bring new capital.
Right, sir. So that's a good strategy. Sir, I just wanted to understand another thing. So you're doing a lot of business correspondent partnerships as I understand it. So have you started making any meaningful contribution to the profitability from these particularly?
Yeah. So this has been just started in this year only. We have added 8 partners. Month on month now disbursement has reached to 4 crore rupees. And we are, giving this at around 16 IRR. So we are making a decent, gap of 4.5% or to maximum 5%. There is no OPEX, hardly OPEX, and absolutely there is no credit loss.
Right, sir. Got it. That's it from my side, sir. Thank you so much for the clarity.
Thank you. The next question comes from the line of Tushar, an individual investor. Please go ahead.
Hello, sir. Thanks for the opportunity. Sir, actually, I have just some questions. First one is on the front of the recently signed MOU with TVS Motors. So, basically, sir, what incremental disbursement potential do you see over the next?
Sorry to interrupt, Mr. Tushar. We are not audible.
To hear properly.
You are not audible. We can't hear you properly.
Hello, am I audible now, sir?
Yes.
Yes.
Sir, the first one is on the front of MOU, which we have signed with TVS Motor. So just wanted to ask what incremental disbursement potential do you see, let's say, over the next 12 to 24 months, and will this change the overall product mix meaningfully?
Yeah. So, TVS, three-wheeler TVS, they have, presently they are having almost 200 dealers across India. And the state in which we are operating, that is 6 states, they have almost 138 dealerships. So, we are targeting to add 20 dealerships every month. So, we have already added, in the January being the first month. So, we started recruiting people. We have added 8 dealers. And we hope that in the next 2 quarters, we will be placed at least 75 dealerships. And we are expecting per dealer 15 to 20 lakh rupees of business. And going further at around 12 months and what we are talking about 18 to 24 months, the disbursement what we are expecting is around 250 to 300 crore rupees. So the way AUM will go to, say, for example, 3,000 crore, year-on-year after increment. This will formulate around 10% of the total. So product mix will slightly increase if our TVS venture goes successfully fine.
Okay, sir. Thanks for that. Is this financing, sir?
Sorry to interrupt, Tushar. You're not audible.
Hello.
No, you're not audible.
Hello.
Yes, tell me now.
Yeah. Sir, I was asking, EV financing is currently the stated focus area. So what is our current share of EV loans in AUM, and how do we see asset quality compared with conventional ICE vehicles, basically?
Yeah. So our total EV out of the entire industry, EV contribution is 7 to 8%, and in our portfolio also the EV contribution is around similarly same 7 to 9%. As far as the performance is concerned, the two-wheeler EV is performing better, especially in these four brands like TVS iQube, Ather, then Ola and Chetak. These four vehicles are doing phenomenal. But as far as EV three-wheeler is concerned, if there are some manufacturers who has been passenger rickshaw E, so local manufacturers, but their vehicles are not to that standard, and after 1 year it has started giving issues. So we also find some issues in collections also in the EV three-wheeler passenger vehicles. So it is I will say it is a mixed scenario so far.
Okay, sir. Okay. So thank you. That's from my side.
Thank you. The next question comes from the line of Abhishek, an individual investor. Please go ahead.
Hi, sir. Sir, I have two questions. While the net interest income and total income have grown, the profit for the quarter has not increased proportionately. So can you just explain the divergence for this factor?
So as we said earlier also, the business which we have done in the month of October, the main income will start coming from the month of December. So this quarter onwards, you will see the increase in the net profit margin also. Okay.
Was a major disbursement of 347 crore out of 740 crore has happened in this quarter only, and the income of this disbursement will start majorly from January. So Jan, Feb, March will definitely will have a good interest income.
Okay. I had another question. So how does the management plan to diversify its geographic presence beyond the 6 states that are existing? Given that in previous quarter we had discussed we will be planning expansion in next financial year.
Yeah. So we are focusing to go deeper in the state where we are present, especially after getting a very good response in the UP. We are now very much focusing on UP, and as well as the same good response we are getting from MP also. So in spite of opening a new state, we will further go deeper in the state where we are existing operating.
Okay, sir. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments. Thank you, and over to you, sir.
Yeah, thank you all for participating in this earning call. I hope we have been able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, please reach out to our IR manager, Valorum Advisors. Thank you very much. Thank you very much to Arihant Capital and Valorum for organizing this earning call, and hope we have been able to justify the query and the question raised by the participants. Thank you very much.
Thank you. On behalf of Arihant Capital Markets Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.